Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today has raised over $10 million in equity, completed $6 million of development projects with another $30 million underway. He's also a major in the U.S. Army Reserves. Scott Lewis is CEO of Spartan Investment Group. Scott, welcome to Purchase to Profits. It's great to have you on the show.
Seth, thanks for the invite. I'm really happy to be here.
Yeah, I'm really looking forward to talking with you. And first of all, I think Spartan Investment Group is a really cool name.
Yeah, so it started out with two of us being Michigan State grads. And, since then it's evolved. And it's actually funny, when we first started, I'll show the listeners, kind of turn my webcam here. So there's one of our original signs. And I keep it on the wall to remind me of how stupid that was to call ourselves an investment group and then put out green and white signs with a Spartan helmet on it. As we grew and we engaged more attorneys, one of them took a look at it and be like, "You guys don't want to be in business very long, do you?" We're like, "Why?" They're like, "Really? We really need to talk about this right now." Hence our logo refresh with changing the colors and the logo, but kept the name though.
Yeah, that's it. That's $500 in legal fees. That was well spent.
It was really well spent, especially because it was one of our good buddies that happened to see the sign hanging in our living room. So it's free.
That's great. So tell us about your real estate goals right now. What do you want to do with real estate?
So I'll say honestly, I don't have any personal goals for real estate. All my goals are wrapped up in Spartans. As the CEO, it's kind of my job to provide kind of the strategic direction and to set that North Star that points our team to where the goals need to be. And honestly, it's really simple. We're building a $100 million portfolio of self-storages right now.
Yeah. And so do you have like that 100 million's your end result? Where are you on that track to get there? And do you set any, quarterly or annual goals?
Yeah, so we're about 40 million into it right now. 2018 was a very, very difficult year. So we're guided by a strategic plan. And in that strategic plan, there are goals and objectives, and it's a 3-year plan. So those goals and objectives kind of run over those 3 years. And then each year we do annual operating plans with the number of purchases that we'd like to do so that we can hit our target. We didn't hit any of our targets in 2018, and there's going to be a lot of folks out there that say the same thing if they're buying correctly. 2018 was a tough year for folks to buy with good fundamentals. There was lots for sale, but there were very few deals.
Yeah. So you as the captain steering the ship, how do you frame your mind so you're not really pushed to acquire those deals that don't make sense, even though that you have those targets that you want to hit?
Okay, fantastic question. So we have acquisitions criteria that we do not violate. We have all over the place. There's probably 20 of them. And our acquisitions guys get frustrated all the time because our process is they underwrite them and then they present to the chief officers, me and Ryan. And Ryan calls me the baseball bat because I crush most of the deals that come through. The acquisitions guys are actually they're like, all right, we just want to save ourselves the pain and time of messing around with this. And they crush the deals themselves. So we set acquisition criteria that meet what our acquisition goals are, and we never deviate from them. Let me caveat that. I shouldn't say never. We never go below them.
Yeah, no, I think that's really important, especially now, like you mentioned, where we are at in the market cycle. It's you have to the margins and the cap rates are so compressed right now. It's so hard to find a good deal.
It is. I mean, we probably analyzed 2,000 or 3,000 deals last year and bought 2. So the old adage, 1 in 1,000, right? That's kind of where it is. And for us, self-storage is only 54,000 out there, and probably 40,000 of them were not interested of us. Yeah. One of the ways we're really rocketing towards that 100 million goal is building them. We have the self-storages that we're looking at that we can compete against, they're $5 to $10 million facilities. That's quite a bit to get to 100 million, and some of them even less. They're 3 million, 4 million, something like that. The way to really, for us to get there, is we're going to end up with a smaller number of portfolio, but a couple of very, very valuable projects that we've built from the ground up.
Yeah.
So we're raw land developers, and that's kind of where our core competency is. And it's a sustainable advantage because there's a lot of people that can raise capital right now and buy cash flow assets. There are not a lot of people that are stupid enough, I'll say, to go out there and try to develop raw land, but we are.
Yeah. And so what changes have you had to make with your business and how you've thought about real estate to go from buying an asset that's already there to developing one?
Yeah, so we really did. We actually had to go the other way.
Oh, okay.
We started in development. We were doing some flips, just single family home, and a piece of dirt came up that our contractor owned. So he was contributing the dirt. So from the development side of the house, there was relatively low risk because we didn't have to buy the dirt. It was coming into the deal. Now we raised the money to do the deal, but that gave us kind of the permitting. It was matter of right, so it didn't have a lot of fur on it, but it still gave us the kind of the insight about thinking about utilities and street cuts and curb cuts and all of the other things, land balancing. And it was a smaller scale, but it kind of gave us the insight to that. And one of the things that we are incredibly good at is what's called the horizontal. It's basically taking a piece of dirt and taking it to entitlements. And then some developers will argue that the foundations are still horizontal side of the house. It just depends who you're talking to. We actually consider it that way, is from taking it from, just an idea all the way to where it starts to come up out of the ground. That's the horizontal. So we're especially good at navigating through bureaucracy. So that's one of our advantages, right? Yeah. So we had to, but development's dangerous. There is a lot of unknowns out there, and it's big dollars, especially when you're doing commercial deals. So we wanted to add cash flowing assets to kind of what else we were doing. So we had to shift our mindset from like not getting paid for years to looking at like getting cash flow in, because we wanted to start to grow the business, and it's hard to do that. Now, 1 or 2 development sells and you've got the operating capital to make that run. But and we had that, but we're trying to grow the team to a level that we needed some cash flowing assets.
Yeah, I gotcha. And that makes total sense. And going back in time to when you were, you had your green original signs with your original logo, to now, you mentioned you have an acquisition team, you've got all that support there. How instrumental has building that team been to your business?
I mean, it's the only thing that's mattered. The old adage is people matter. Well, that's the same thing here. When we started, it was just me and Ryan. Ryan's the chief investment officer and my co-founder. It was just him and I doing everything. And like our finances were on a spreadsheet. So when the finance came in, he's like, really? This is what you got. You're moving millions of dollars around. And this. He's like, okay, I guess I got my work cut out for me, right? So we went out and we've taken a little bit of a contrarian approach to kind of how we brought on folks. We didn't start with, a lot of people will say like, the number one person that changed my life was my admin assistant. Well, I still don't have an admin assistant. We brought on very high kind of caliber people, and the way that we pay them is it's a small base with a lot of ownership. So like they believe in it. Full disclosure, 2 of them are wives of my wife works for our business, and so does Ryan's wife. But that's a huge opportunity cost. Like my wife was an intelligence analyst for Special Operations Command. She worked for McKinsey, the consulting company. So and Ryan's wife worked for Hilton and some other pretty high powered players. So there's a huge opportunity cost there. So they gave up, both of them gave up 6-figure salaries to come in and work for our business because they believed in, obviously they believe in Ryan and I, but they also believed in the business that we were creating enough to kind of put it all out there and join their husbands and deal with working with their husbands.
Yeah. Staff
meetings can be interesting. I'll put it that way.
For sure. And those meetings don't end once you go home. They can keep going too.
So like nothing gets you fired up like pillow talk about an impending self-storage deal.
I think that is the quote of the month right there.
Probably. probably. But no, but it's double-edged sword, right? Whenever you hire employees, you take on a risk that, someone that isn't like as much invested as the wives are, you could have integrity issues, you could have honesty issues. There's a lot of issues that you have with working with your spouse. There's other issues, right? Like Lindsay's never going to see me as the CEO of Spartan, right? And Jackie won't either, because we were really good friends, and that's okay, because I also know that I never ever have to worry about Jackie and Lindsay doing something nefarious for the business. So there's a trade-off to everything, and I'll take a little bit of attitude here and there to really really know that I've got people that with high integrity and good honesty.
Yeah. And when you brought them on, was the focus, like, did you bring them on for acquisitions, or what was their role? Because you said you took a contrarian approach. So what were they up to? Growing the business, going after deals?
So Lindsay was the first one to come on, and she's our director of business intelligence. So one of the things that we knew is we were small. It was just me and Ryan. We wanted to grow. In our deals, the requirements for our deals are very strict, and they've always been that way. So we knew that we needed to figure out in our battle space, which is, we're a smaller company. We're not competing against the big dogs. So in that battle space, we needed to know on how we could beat our competition. And data was how we were going to beat our competition. And my wife, through her old positions, got very knowledgeable about leveraging data to convert it to information so that the leaders could make decisions on it. And that's really what we brought in first, because we wanted to analyze the data sets that were out there, that were at our disposal, that we could get as a small company, and really use those to inform our decisions on where we're going to look, what type of assets, how we're going to find these assets. All these different market fundamental questions and acquisitions questions are all answered by data.
Yeah, I think that's really interesting because, like you said, most people go out and hire their first administrator to bring onto the business, but you guys focus on the data aspect. So were you just looking for properties and areas that the bigger fish just overlooked because they're just so big and they weren't focusing on those areas?
Yeah, so we really looked at what markets can we play in. That in the storage space, there's 5 public companies, and they're all REITs. And to go to toe-to-toe with those guys is not all that smart, and we knew that. So we wanted to see if we could figure out some secondary and tertiary markets that folks weren't paying attention to, that they should be. And there's just so much data out there that it's hard to sift through it, especially if you don't understand data and you don't understand how to manipulate it and create data sets that data is worthless. It's absolutely worthless if you can't manipulate it to turn it into information. And that's what Lindsay's able to do. So she's able to take those data and turn it into information. Now, the big companies absolutely have an army of Lindsays, but they're expensive. So for the listeners out there, I highly recommend, you can get really cheap labor. You just got to go and marry them. So you got to balance, how bad do you want it, right? So, but in all jest, she just happened to, both Lindsay and Jackie had really good skill sets to bring into the business, and that Ryan and I, those weren't criteria for marriage when we started the relationships, but it just turned out to be a really good kind of happenstance.
Yeah, no, that's really cool. And so for yourself, do you have any rituals or routines that you follow, maybe daily or weekly, that helps you stay focused on the business?
Yeah, honestly, exercise is one of the key things. People always say that, right? But my normal routine, I'm an Army guy, so I get up early. I get up at 5, and I drink coffee for an hour, and then I'm in the gym at 6. And I'm a CrossFitter, so I take 1 hour to do PT, and then I sit in either hot tub or our sauna for 20 minutes afterwards. And that's really kind of the time that some really good ideas come to. So I really try to protect that routine as much as possible. And then I do, I take the goals from Spartan, and all of us do this, and I decompose them down into monthly, quarterly, monthly. We call them rocks. It's part of Gino Trackman's EOS system. So if your listeners are looking for that, it's Traction is the name of the book. But And then I do that for personal and financial goals as well. And I write them down, and I often talk with them. I talk them over with my wife. Because if you just make goals in your head, you're probably not going to achieve them. I think it's like a 20%. I don't know. Somebody can look up the statistics, but if you write them down, it becomes a lot more achievable. But if you write them down and you talk to people about them, the probability of success skyrockets.
Yeah, no, 100%. So looking back at all the deals that you've done so far, is there one that stands out as a keystone deal?
Yeah. So, I've talked a lot about self-storage, and I've talked about how we have very strict acquisition criteria. And now I'm going to completely confuse your listeners because I'm going to talk about an RV park. And the reason that this came along is we were negotiating on a storage deal that fell apart, and the listing agent he really liked working with us. There's a lot of brokers that really like working with us. We're very black and white. There's no stringing people along. We're very quick to get back. And brokers know within the first phone call if we're going to buy or not. If we're going to buy, we're going to buy. It's just that simple. Unless something breaks in due diligence. So this particular broker called Ben, our director of acquisitions, and he's like, "Hey man, I got a deal for you. Like, I got an RV park in West Texas." So Ben's like, "What are you, high? No, I don't. Like I told you, storage. You know, you want me? Like, I don't even know where West Texas is." And the guy kept on him, right? So Ben he's a deal junkie. So he's never wanted to pass something up. He ran the numbers. So he brought it to me, and he's like, "Hey, Scott, I got a deal for you. RV park in West Texas. What are you, high?" And he's like, "Come on, man. I'm like, no. I don't want an RV park. I don't know a single thing about operating an RV park. No, nobody in our company does either." He's like, "No, these numbers they're amazing." I'm like, "All right, man, listen." So we have 3 evaluation criteria for any deal that we purchase. It's got to be low maintenance. It's got to be very easy to operate, and I've got to be able to evict people very, very quickly. I don't believe in people people occupying something that I own without paying for it. So that's a key thing for us. So I'm like, go figure this out for an RV park and come back to me. And he did, and it met our evaluation criteria. So I'm like, all right, man, let's run with this. Let's put together the pro forma and then brief Ryan and I like we normally do. And let's see. So they had it listed at a 17 cap. So for your multifamily listers, their bonds are right. This is like completely blown. Like what? But it's an RV park in Odessa, Texas, right? So that's where it's actually located in the Permian Basin, which is the #1 oil producing area in the United States, and it's quickly becoming the #1 in the world. It kind of goes back and forth between #1 and #2. So Lindsay, our director of business intelligence, also does all of our feasibility studies and research, and she's like, "Hey, like the Permian's coming off kind of an area of low activity, but she's like, it looks like fracking is coming up with some new technologies and that they're testing right now that are about to come online that are going to make the production of oil cheaper, so they can probably sell cheaper, because historically oil they pump in the Permian about $55 a gallon historically. Now with the new fracking techniques, it's much lower than that, and it's just going bananas down there right now. It's absolutely crazy. It's $500 a night for a Hampton Inn. It's absolutely insane what's going on down there. So Ben finally convinced us that we should do that deal. And the reason I'm highlighting it, #1 is it's just crushing it in cash flow. It's operating at like a 37 cap right now.
Nice.
Based on what we purchased it as. And it really was a huge team effort, because it was a disaster when we got down there. Because it's an unfortunate story. It's some brothers and a cousin that were they partnered on it. They built the park. They, unfortunately their dad died in 2016. The brother's dad died in 2016. So they really kind of took their eye off the ball. The park kind of went downhill pretty fast. They like anybody selling an asset, they tried to pump it up in 2017, but 2016 was so bad. Their annual NOI in 2016 is less than 1 month of our NOI today.
Wow.
So we took the park over, and it was really like to finance a park like that at the purchase price with the tax return in 2016 the way it was a disaster. So our financing fell apart at the 11th hour. It was, we raised private equity for it. We raised private debt, and our lender left us standing at the closing table 96 hours out. And yeah, anybody that's done enough deals has been in that position. But in this one, it's an RV park in West Texas, so we were out of options. So we raised our own private debt. 96 hours, we had $1 million in the bank. It was, it was a total team effort. And then I'm one of the project managers inside of our company as well as the CEO. And Jackie is our director of operations. So in the last 12 months, we've turned that park around. We've basically replaced most of the systems. Most of the systems were built for a smaller park, not at the occupancy that it is. So we knew we were going to have problems. So we raised a bunch of capital expenditure budgets. And over the last 12 months, we've only owned it a year. It's a year on March 4th. We've 100% turned around the park. So it's just really a really awesome team effort. And now that park, it's just absolutely crushing it in cash flow. And the other thing that we didn't even know, because it really wasn't talked about in March of 2018 too much, was it's in something called an opportunity zone. It's a new thing in the U.S. tax code, right, that everybody's talking about. And the damn RV park's in an opportunity zone. So it couldn't be any better of an investment.
That's great. So where you're at right now, you're about a year in. Are you looking to do a refi at some point and pull out most of that initial capital?
Well, so we did refi it. So we raised a private debt instrument. That was at 12.5%. So that was a kick in the shorts.
Yeah.
And then we went, after we turned it around, we got it to 100% occupancy. We raised the rents by 30% across the park. So then we took it to a lender in September of 2018, and they gave us a term sheet, and we went back to our private investors. Full disclosure, I'm actually one of the private investors. I put my money in on the debt side, and we asked, hey, what do you guys want to do? We have this loan from a lender, but if you guys want to stay in, we'll kind of match the terms a little bit and then roll forward. And everybody's like, no, we'll just keep earning the cash flow. Let's keep going. So we modded that loan, and that loan was kind of a semi-permanent loan that they wanted to do the cash flow. So, anything's possible to be able to do that. We're trying to keep the debt service really low on it. So just because it's producing really good cash flow, and that's what everybody really likes. And, but we're considering all options.
Yeah. And, when you were faced with that situation, you're right before closing, and then your lender walks away. Many of our viewers are just getting started in real estate where they're raising capital, and they think that raising $1 million in a month is hard. What do you do to raise that much money in, the span of a day?
Yeah, so that's a great question. So the best thing that you can do is, get your name out there and make sure it's a really damn good name. I actually wrote an article. It's in Forbes, not the magazine, but online it talks about how you kind of get your house in order to really be able to raise capital for syndications. And that article is written for Forbes. So it wasn't for real estate specifically. It was just kind of syndication, because you can syndicate anything. So it's really you just need to make sure that your house is in order before you even try it. And what I mean by that is your company, or if you're an individual syndicator, you need to demonstrate the competencies and attributes that people will believe in to be able to do that, and then just really kind of get your name out there and don't be afraid to go for it.
Yeah. So was it just a matter of, you just do a phone blitz, you get left at the table, you just start hitting the phones?
No, we sent out a single email and $1 million came back in. It's when you build your network and you've got a track record, and more importantly, people know that you're going to do the right thing. I'm a military officer. Ryan is an airline pilot. There's, of course, both professions have integrity issues or can have bad eggs, but generally the people that do kind of what we do, there's not a lot of room for error in what we do.
Yeah.
So going out there and not being the best at what you do can often have pretty dire consequences. So, I think that, plus people have gotten to know us and they know our team, and they kind of see what we're doing, and it just drives confidence that we're the type of people that will do the right thing, even in a tough situation. And that's really the reputation that you need to get out there for people that really trust you with their money.
Yeah. No, some really good points. And what was it like for you as a business to pivot a bit and go after that RV park when it wasn't in your wheelhouse, at all?
Yeah, that's kind of one of our core competencies is being able to pivot. So we systematize and develop processes. I'll say it that way. Develop processes for every single thing we do. And for operating most real estate assets, it's not horribly different from one thing to the other, especially do due diligence. Operating hotels, yeah, that's really different. But it's not much, for us, storage and RV parks or mobile home parks, they kind of go hand in hand. We literally use the same software that we have in our storage facilities for the RV park because there's no RV park software. So if it would have been like an amazing deal on a hotel, we wouldn't have done it because it was too different, right? We don't know a single thing about operating a hotel, and that is a much more complicated beast than an RV park, right? An RV park is relatively simple to operate. So we knew that we had the chops from operating storage, and we knew that we have the operations mindset to be able to analyze a situation, draft up a process, make it an SOP, and then implement it. That it gave us the confidence that we could do it.
Yeah, no, for sure. I'm really glad you brought that one up as an example deal. That's a cool one.
Yeah, it's one of our. Most of our deals are pretty good on their side, but that one is it's absolutely bananas. So it's done very, very, very well for everybody involved.
Yeah. So getting into real estate, how has that changed your life so far?
So it's allowed me to build my company. So when I got into real estate, it was, I was a framer in high school and college. That was really kind of my first quote unquote getting into real estate. Then I bought a condo in 2005, and that did not go well. I still own that condo. I left. I lived in it for about 12 months before I joined the military and headed off to Fort Benning. And it kind of became an accidental landlord because by the time I bought it in the end of 2005 and I left with basic in the beginning of 2007. And that was a bad time. I had a couple offers in 2007, but I was stupid and was trying to get more, so I rejected them. And I learned a valuable lesson on that one, right? A bird in the hand worth two in the bush, right? And that was kind of my take into investing and learning about leasing and realizing that I hated everything to do with anything residential real estate and rentals. I'm just not my forte. And then really what kind of got us started was there was a house that was in between Ryan and I. We were neighbors in DC, and we lived in a neighborhood that was kind of up and coming, and we called it the crack house. And it was literally like right in between ours. And my wife she came home one day and she's like, "You need to do something about that." What the hell do you want me to do? And she's like, "I don't know." So I executed a direct mail campaign, even though I had no idea that that's what I was doing. Because I got to find the owner. I got to try to find her phone number, and I found an address. I'm like, I'll send a letter because she's not answering her phone or returning my calls. So I'll send her a good old handwritten letter in the mail. I was way ahead. This was in 2012 before flipping came on. All HGTV and all these direct mail companies came out and they handwrite letters for you. It was before all of that stuff. And that's kind of what we did. That deal, we got that property. We did that deal. We made like 150% return on it in a year. It was a really, really smashing deal. That kind of gave us the money to seed the company. And I always knew I wanted to build a company, and I enjoy real estate. So real estate is the vehicle which is allowing me to build a company.
No, that's awesome. And it sounds like things are going really well for you. And I'll have to have you back on once you hit your $100 million goal.
Now, hopefully that's in like 10 months. Because our strategic plan ends in December of 2019, and we're supposed to have a $100 million portfolio by December of 2019. So,
well, okay, well, we'll plan for January 2020, and then we'll have you back.
That works.
Awesome. Well, Scott, if somebody's looking to get in touch with you or learn more about what you're doing, where can they find you?
Yeah, it's Scott at Spartan-investors.com. Or if somebody's interested in investing, they can go to our website. We have an investor intake form, and that website is www.spartan-investors.com.
That's great. Well, Scott, just want to say thanks so much for taking the time today and sharing your success.
Seth, thanks for having me, and I hope it's valuable to your viewers and listeners.
Oh, it definitely was. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.